Hello and welcome to another episode of the Startup Operator Roundup. I'm Roshan Karyappa.
And I'm Gunjan Saha, and together we'll break down the biggest headlines of the Indian startup ecosystem. In this week's roundup, first, of course, we'll be talking about the collapse of the Sony and Zee merger that was slated to be around $10 billion and discuss what are the implications for the media industry and startups as well. Next, we have a $1 billion story of Byju's. They recently announced their FY22 audit results. And well, this is not about the valuation being slashed to $1 billion, but its losses ballooned to $1 billion. Then Amazon gets notice from the government for selling sweets as Ayodhya Ram Temple's Prasad. Groww to discontinue US stock offerings from later this month. And Krutim becomes India's first generative AI unicorn. So a lot of exciting news to discuss in this week's roundup. But before that, if this is the first time you're tuning into our channel, do consider subscribing it, for we regularly discuss startup updates and talk to some amazing founders, operators, and investors from the ecosystem. And if you're a regular listener, please share this video with your friends and relatives. Let's get started. Roshan, back from a long weekend. How was it?
Yeah, pretty good weekend and peak test match cricket also, I would say, right? With West Indies defeating Australia in the Gabba, no less. And of course, our boys losing to England.
Boys played well.
Boys did play well, I think. But Australia, man, seriously, they got like belted by the West Indies team, and it's amazing, right? 7 of the West Indies players had played less than 10 tests, I think, and Chris Bott is a very big supporter of the West Indies, so he was particularly happy over the weekend. So yeah, actually, he's a supporter of the Australian team, but. Yeah, I think you should be happy for the underdogs, right?
So, support the sport.
Yeah, support the sport. It's good test match cricket. Yeah. It's always good when it happens to someone else. Yeah.
Well, another thing, the Mumbai Trans Harbour link opened up, right? And man, that looks sick.
Yeah, sexy.
Our producer just showed me a picture of the road leading up with the Mumbai skyline up ahead. That I mistook it for New York. And what's even more marvelous than that is the revenue that is generating. Almost 1 crore every day.
Yeah, and I think it's a thriving hotspot for TikTokias and the grammars, I think, right? People have gone nuts on that. So, yeah, it's great. Infra is sexy, man. I think infra is absolutely sexy. And we've had amazing infrastructure developments over the last 8-9 years. Yeah.
All right, let's talk about the merger that did not happen. After nearly 2 years since it was announced, Sony officially terminated the $10 billion media merger between its India unit and Zee Entertainment Enterprises on Monday, the 22nd of January. Sony has demanded a termination fee of $90 million on account of alleged breaches of merger cooperation agreement terms by Zee, invoking arbitration and seeking interim relief against the enterprise. This deal, if it had gone through, would have created a cash balance of $1.5 billion at closing. Now, this is not a small amount at all for a media house. And one of the primary reasons why the deal fell through is because of the lack of consensus over the leadership of the merged entity. So this definitely has a lot of implications for the media industry in general. But what is the significance for some of the startups operating in the media space?
Well, media is one industry that is perennially consolidating, right? You can look at, WPP, for example, or what is that, Murdoch's network. I forget it, right? They're always acquiring, they're always acquiring. And the scale of this acquisition, or rather merger, is such that, there was always going to be an outside chance that this might not go through. Right. We discussed last week, for instance, the Figma and Adobe merger that fell through, right? So something similar on that line, I feel. Although, the shareholders have written to the management to ask for, an explanation as to why this did not happen. Look, the OTT market is really, really tough. The content business is very, very tough. In fact, I'm due to host Rohan of the Pocket FM on the podcast, right? And one of the questions that I am really curious about asking him is, what is the template to follow? Because we've seen Netflix has been hit, post 21-22, right? And your library is only as good as the last maybe like 3 or 4 hit movies or series that you produce, right? So you have to become a producer of sort. And my memory jogs back to Zynga, for instance, right? Zynga was this phenomenal gaming company way back when. I mean, 10-12 years back, really really famous unicorn, nevertheless. And they tried to use a lot of analytics and data to kind of figure out what's working, what's not. I mean, they kind of pioneered that approach. And you figure that I mean, you can't really put it in a box, right? I mean, yes, there is certain method to the madness, but it's super difficult, I mean. And which is why, I mean, props to the likes of Disney and so on, who've survived as long, right? But it's a completely different business, like as an aggregator versus a content generator yourself. Right? I think the future will perhaps depend on more user generated content, right? And which I think Netflix and the others are kind of optioning folks out, right? So that is, I think, the future. But interesting. Let's see. I mean, what's in store. I mean, I hope that we have more choices as a consumer for our weekend watch and whatnot.
But I think there is one clear winner out of this merger falling through, right? And that I think is Jio Cinemas. They have been investing a lot in bringing live sports onto the platform. And had this Sony-Zee merger gone through, then that would have become the largest streaming service in India. Currently, it's Hotstar. And this combined entity of Sony and Zee would mean there's 70 TV channels, 2 video streaming services, and 2 film studios, making the largest entertainment network in India.
Yeah, and I think Geo and Hotstar were also like in the discussions to sort of merge, right? And yeah, I mean, that brings me back to the original point that we stated, which is that these businesses are forever consolidating. Yeah.
Yeah, but Netflix, I think in a recent press interview, right, they mentioned that let all these mergers and acquisitions happen with the smaller crumbs. We are going to invest billions of dollars to get WWE onto the platform. And they, in fact, reported one of the best quarters recently since the pandemic, where they registered the highest number of new paid users on the platform.
So there's been a drastic correction with Netflix also, right? I mean, because, there was this trope, go woke, go broke, right? That was happening. I think nobody wanted to watch all of the really woke stuff that they were producing about a year back and so on. So since then, I mean, I think the ship has tightened up a little bit, or a lot, I should say. Right. So yeah, props to them. And they're a public, listed company in the US. So obviously they have that, they have that advantage of obviously earning in dollars there, which some of the folks here, the India businesses, don't have. Yeah.
Interesting. Okay, let's talk Byju's, our old favorite. About 22 months after the reporting period ended, Byju's finally shared its audited FY22 statements with the Ministry of Corporate Affairs on January 23rd. Its losses ballooned from 4,564 crore rupees in FY21 to 8,245 crore rupees in FY22, while revenue rose 118% to 5,289 crore. Nitin Golani, who is the CFO, said that one of the biggest reasons of this performance were 2 acquisitions, which were White Hat Junior and Osmo. They have not really fared well. White Hat Junior has contributed around 3,000 crores to the loss, and Osmo about 1,000 crore. But what is interesting to point out here is that these are FY22 numbers, and currently we are in FY24, right? So it'll be interesting to see how they cover up the losses, because this is, of course, at a time when Byju's was getting battered left, right, and center.
Yeah, I mean, look, more than a few auditors have kind of resigned, right? And FY22 is like at least a year and a half delayed in terms of publishing these financials, right? I mean, and it's unfortunate. I think White Hat Junior has been the kiss of death for Byju's, right? I mean, of course, they acquired them for, I don't know what it was, 250 million or something of that sort, way back when. And since then, about 8 or 10 acquisitions followed. And, we've discussed this plenty of times over the previous roundups as well, right? That, flying too close to the sun, getting too big to sort of manage. But yeah, I think, look, the valuation has been slashed by, I think, 90%. They're down to about $1 billion, $2 billion, or whatever that is. And I'm sure that's not the first time that we'll hear of that. It'll be further slashed. What becomes of the final entity, God alone knows, right? I mean, everything hinges on that Akash IPO, which also at this point of time doesn't really bode well, because see, trust and reliability is a binary thing, right? You either trust a brand or you don't. It's uh, so it'll be difficult with all of the negative news around Byju's. It'll be very difficult for them to sail through after this, I think. Yeah.
Yeah. Okay, moving on to our next news. Amazon gets notice for selling sweets as Ayodhya Ram Temple's prasad. There have been a lot of deceptive trade practices on the platform where vendors are selling sweets under the name of Shri Ram Mandir Ayodhya Prasad. They are misleading consumers by implying that the sweets are from the Ram Temple in Ayodhya, which violates the Consumer Protection Act of 2019. Now, the center has raised a notice on this based on a complaint by the Confederation of All India Traders, accusing Amazon of influencing consumers' purchase decision based on false representations. Now, the center has given Amazon 7 days to respond or face actions. Now, I think this brings about a rather bigger question, right? What ownership does or what role rather the platform plays in verifying what is being sold on the platform?
Yeah, this is a very, very difficult question to answer, right? And it's a sort of a negotiation that's ongoing forever. In terms of how much liability does a platform, something like an e-commerce company like Amazon or Flipkart, how much liability do they have, and to what extent? Right? Now you can argue that, hey, I can do all my checks on the sellers, and after all, I mean, the last mile is dependent on them, but there could be drastic consequences as well, right? Now, this is a clear case of fraud, but what if there was something harmful, for instance? Right? So, again, I mean, the discussions are ongoing. I think there was this e-commerce act or something that was due, which is still under consideration. A lot of these regulation, right? I mean, again, that's a really tough job, and something that, I mean, I wouldn't definitely not envy, right? Regulating some of these newer startups and business practices. Very tough. I would say Amazon should do the best it can. And the onboarding is pretty tedious now with any of these, right? Even with the business pressures to kind of onboard as many merchants on the platform as possible, they have a 10 or 12 step procedure with a proper KYC and so on. Mistakes do happen. I hope it's rectified, and yeah. But otherwise, I mean, the Prana Pratishtan was last week. It was a milestone moment, I should say.
This was long way coming.
Yeah, of course. Yeah. So I'm really looking forward to going to Ayodhya sometime this year and sampling the actual prasad.
Nice. So, okay, as a platform grows in size, I think it does become the responsibility to manage the repercussions or second order effects it has.
Yeah.
For example, like Facebook, in a recent article I read, by 2050, Facebook would have more profiles of dead people than living people.
Interesting.
Now, today we do not have laws around what to do with profiles of people who have passed away. Who do we give the password to? Do we give them access to their profiles or not? But these are some problems that companies like Amazon, like Facebook, really need to think about at some point or the other.
Like I said, we can all theorize on what policy and regulators should do or not do, but the consequence of these actions are crazy, really. And my thing is that you have to always keep it as broad based as possible, and have like a easy redressal and arbitration mechanism, right? So that you can quickly fix things as soon as possible. So yeah.
In other news, Groww discontinues US stock investment service, saying that there are a lot of complications in adding USD funds, high withdrawal fees, frequent downtimes, and delays in money settlement. The new investments for US stocks stop after February the 27th, and withdrawals stop after June 30th, 2024. Recently, there was a lot of issues with logging into the application as well, and several clients were unable to access their accounts, and they are demanding compensation. So, Roshan, we're talking about the role which platforms play in the second order effects, right? Now, Groww today is the largest stockbroker application in the country, and I think second is Zerodha. But imagine people not being able to log into accounts, and if you think of the scale, that's like crores and crores of rupees in losses for people.
Yeah. No, I mean, it's a harrowing experience. That much I will tell you, right? I personally don't invest in the US stocks, etc. I mean, Desh Bhakti aside, I think it's also like a compliance challenge, right? I mean, there's a bunch of filings, and I really like to simplify my life, right? And I do feel there are massive opportunities here. So, but it is. From a consumer perspective, it would always, or from an investor perspective in this case, right, it would always be helpful to have a taste of the world. But yeah, apps like these, which facilitate trading and so on, uptime is a key constraint, right? One of the most integral things, and that's what builds trust and credibility for the platform. So yeah, I really hope the Groww team is kind of solving this and putting all of the checks and balances in place that it doesn't happen again.
Yeah. On to some other news. Krutim became India's first generative AI unicorn. They raised $50 million at a valuation of $1 billion from Matrix Partners India and other investors. Krutim is another startup that is founded by Ola Electric's Bhavish Agarwal, and he claims that Krutim outperforms OpenAI's GPT-4 on Indian languages and performs better than Meta's Llama 2 chat on English. Krutim is also developing its own chiplets and other AI-focused hardware for data centers. Now that's really interesting because I think OpenAI's Sam Altman, he's out there in the market trying to raise funds to build a hardware startup to support, AI developments and stuff. And now this is happening in our own country.
Yeah, it's pretty interesting for sure. And there are some parallels to Elon's story as well. Elon and Sam have an interesting parallel as well. They both made money with companies earlier, and then they moved on to build other massive companies, right? I mean, Elon, of course, with Tesla and SpaceX, and then Sam with OpenAI and what he's raising for to build chips and whatnot. Now, look, I mean, the era that we're living in is is the AI age, I would say, the starting of it, and all of these computing power and hardware becomes super important, right? So yeah, I mean, 50 million at a $1 billion valuation, lesser said the better in terms of what you can rationalize about it. But look, I mean, again, from an investor perspective, I think this is a successful founder, right? I mean, he's built Ola Cabs, he's built Ola Electric, and now he's on to this. So yeah, they're again betting on the horse that wins, I suppose, right? In that sense. And Bhavish is excellent at raising money, right? I mean, he's raised from SoftBank and from a few other market investors before. So it's good. I mean, I know that people can tend to be cynical in terms of hey, how is this startup raising all of this money at this point of time? But yeah, let more money come into fundamental stuff, right? I mean, whether it's AI or the other stuff, as long as it's not another what do you say, another consumer tech food delivery app. I think it's fair. Nothing, not that there's anything wrong with that, but I mean, I think there's enough money on those things. I mean, let's support more fundamental innovation, I would say.
Apart from Krutim, there was another significant fundraise by EcoFi. EcoFi is an NBFC company that focuses on financing green projects. They raised $10.8 million from FMO, which is a Dutch entrepreneurial development bank. For our Talk of the Town section this week, we have a very nice tweet by Sridham Vembusar. He tweets, India has a rich history of entrepreneurship, overshadowed in the past decade by the exit-focused startup, which taught us to lose other people's money chasing a dream. Long-term enterprise requires us to balance vision with profit, and that discipline underpins our freedom. Can you break this down for us?
Yeah, I mean, it's consistent with Vembusar's previous musings as well on this, right? Where he says that you have to build with no exit in mind, right? That you want to run this business perennially, or at least have a vision for that. Zoho itself is 25 plus years old and is shipping more product than ever before, right? They don't show any signs of slowing down. And famously private as well, right? I mean, they haven't taken any external funding, or rather, I mean, very, very little, I would say, right? So I think capital efficient businesses are the flavor of the season. right? And 21 was a glorious aberration. Thankfully, better sense has prevailed, and people are focusing on things like profit and cash flow and stuff like that. So, yeah, it's good. It's a much needed course correction, and I'm really looking forward to entrepreneurs who can build the next few Zohos and Naukris and whatnot, right? I mean, people who can build large conglomerates. And if you think from a tech perspective in India, right? I mean, I mentioned the Magnificent Seven in in the US, right? I mean, they have a disproportionate share of the market there, right? I mean, comparatively, India has not many of that type, right? I mean, yes, we have TCS, and and that's a large company, of course. It's a blue chip. But then, I mean, if you look at it as a pure product company, tech product company, there aren't too many, right? I mean, you can really like count how many are even listed, I would say, that qualify to that. So yeah, there is really a big scope to build like a massive, pure tech company in India, and that could sort of take all the gains, and maybe we'll have our own version of the Magnificent Seven, in maybe 5 or 10 years. Who knows?
Interesting. But I also think a new, wind that is blowing across the country is the whole development of hardware startups.
Mm.
I think in 2024 we'll be seeing a lot more of those. So, folks, if you want to hear about them, make sure you subscribe to our channel because we'll be discussing these news in the Startup Operator Roundup. So that's it for this week. We'll be back again with more exciting news next week. Stay tuned. Keep following us on social media. And if you want updates to be delivered straight in your WhatsApp, check the link in the description below. Until then, take care. Have a great week ahead.
Cheers, guys. Bye.